Okay, great. So let us do the last bit. This is the last video, and I'm going to talk about this question of because we're talking about sole traders, right? And ultimately, sole traders are pretty simple. These are pretty simple people who just want to run their businesses. And imagine they have to be dealing with these capital allowances in particular, because we have these because I mean in accounting we fundamentally have this difference, don't we, between capital and revenue expenditure. And as an accountant, over time, you just seem to naturally know when something is capital X and revenue X, and this causes a lot of problems for normal traders. And so, just to kind of make things easier, the government's like, you know what? Just do things on a cash basis. First of all, when we come to VAT, we'll see there's a similar sort of structure, just sort of saying, oh, this accruals business is just a bit in the way. Just do things on a cash basis. So let's walk through the key points first of all. As a business, if you are a sole trader or a partnership, you can choose to calculate your profits and losses on a cash basis, as in based on you recording your accounts, breaking all the rules we've talked about, just as in when you receive the cash and when you pay for it. Again, in that period of the account, rather than what we know to be the accrual system. But this, of course, is subject to a case where your cash receipts are just, if you like, just up to 150,000. Companies can't have this. This is purely for sole traders, and if you like, partnerships. Let's look at the next page. So yes, companies can't have them, and when I say, I mean, if you notice, I said partnerships because limited liability partnerships in effect are companies, if you like. They're partnerships with limited liability, and that's what companies really are about. So if you choose this cash basis, you can continue until your cash receipts are greater than 300,000. Yeah? So that's kind of those are the boundaries here. But the key point here is everything's done for cash. There's some big rules. When I say big rules, the classic ones you should just remember. The rest you'll come round to. So they will always tell you in the exam question, if you are to prepare a set of to adjust a sole trader's accounts based on prepare a sole trader's account on a cash basis. You will always be told, and TYU 5, when you do that, will be you attempting to prepare this. Right. Okay. So here's the thing. Let's just get the main rules in place first of all. If you decide to, under the cash basis, if you decide to prepare your accounts under the cash basis, the biggest rule is that there is no distinction between capital and revenue expenditure. Now, cars, where are cars? I'll come back to that. I'm sure it's somewhere. There is no distinction between capital and revenue expenditure in respect of plant, machinery, and equipment for tax purposes. So you buy some machinery, put it through as revenue expense. No one cares. You buy equipment, put it through as revenue expense. Because if you don't do that, what you then have to do is you have to then start, when we get to chapter 6, creating these assets in your fixed asset register and preparing capital allowances. So if you like, and when you sell these things, these assets, the receipts, so just think of them as normal revenue expenditure. Now, sorry, I wanted to go for a lighter, there you are. So here we are. So now in the, sorry, I thought I had that there. But what we do have is this scenario here, where we have, oh, wait a minute. Sorry, it's not working. Sorry, just wanted this to work. Okay. Right, okay, and let's come here. Right, anyway, key point here is, I was trying to get a different pen color. The key point here is that For cars, though, as you can imagine, I'm sure you can sort of think of the government not wanting to just allow you buy a car and deduct the whole value of the car from your expenses. No, for cars, capital allowances remain available for expenditure on cars only, right? The capital cost is not an allowable deduction when paid. So you can't, if you like, for cars, do everything we've just been talking about, right? So that's kind of the key, the main issue there. That's the main issue here. So the key advantages of the cash basis are it's simpler, right? It's just simpler accounting requirements. No need to account for receivables, payables, none of that. Just when you buy it, when you pay for it, in that period, done. And pretty much profit is therefore on a very much a cash basis, if you like. Then you have the money to pay your associated tax liabilities. Like I said, when we get to VAT, we'll see very similar events taking place. All right, let's go to the next page. So the other thing that is associated with this, let's see. Yes, this is big. I mean, I was going to come to this when we got to trading losses and trading profits. If you use the cash basis, you can only ever carry forward. The only thing you can ever do, I mean, we'll see the rules about carrying back, carrying forward, but one of the main disadvantages is that you can only ever carry forward these losses to set against future trading profits. So I'm going to have to remind you about this over and over again. It's a little rule that's so easy to forget. But then, and I suspect you will see this in Section A, Section B, not really Section C, because it's just the one-off point. So the losses can be carried forward against future trading profits. But if you were doing the normal accrual basis, you can do a lot of things when we get to Chapter 9. But with this system, you can only ever carry forward. So for the flat rate expense, yes, so here we are. So if you are therefore using the cash basis, so any unincorporated business, whether or not they are using the cash basis, whether or not, just to make things simpler again, you like an unincorporated business, it tends to happen more for the businesses in reality, the businesses that are using a cash basis. You can opt to use, if you like, to use the flat rate, if you like, expense adjustment, if you like. So, so I think this is the key point here. However, note that the examiner has confirmed that the flat rate expense will only be examined when the business has chosen the cash basis. So if you're using the cash basis, if you like, it's because you see, as you can imagine, you might have a number of, you might have, say for example, I don't know, you might have a total cost of £9,000 for your costs of managing your car. You might have a range of costs for managing your car, running costs, petrol costs, blah, blah, blah. And they're telling you, well, you have the option of using this method, of just putting all this through and dividing it and separating it out and whatever, or just scrap this and just go for the flat rate method, flat rate expense method that we talked about when we were studying with the employee, when you had 45p for the first 10,000 and 25p times anything over that. So this is really to do with the cost of running a car. It's sort of saying, keep it simple. You can use this method instead of having to put your own method, putting the actual figures in and trying to apportion what's private. So just don't, just sort of use this method. Right. So, and we'll see how it works. We'll see how this sort of works. So we have, so here we are. The flat rate method sort of says you have this motoring expense. So you have your capital costs and your running costs, blah blah blah, repairs, servicing, fuel, and in terms of the adjustment, you work out this thing that we've been doing, 45 and 25p, the same way we did the others, And then we have this idea of a private use that we can adjust as well, based on, we'll see an example when we do this thing, but it will be given to you in the question. So you can also have private use of accommodation as part of your adjustments. Right. So let's see the next page and see what we what we have. It's almost there. Right, so yeah, so they're saying sort of we're going to see how this sort of presents itself, and I'm just going to sort of you're going to do this example in the end, but I just want to sort of highlight a couple of points which are critical that I want you to focus on. So the first thing I want to talk about is this, from a teaching point of view, is this issue here with this motor expense. That's the first thing I want to talk about with the motor expense here. So, like I said, this is a motor expense. It tells us the motor expenses, and remember, like in accounting, this would just be a normal. This could be accruals, and just put through as normal as we know it. But on a cash basis, you can see here it says the motor expense of 4,200 relates to Rosemary's car, and in the period she drove 11,000 miles. So in effect, on a cash basis, we would disregard this figure because this is on an accruals basis, and on a cash basis, we would use the AMP rules to find out what they were. I mean, it's so much easier when you're talking numbers in accounting, isn't it, as opposed to trying to explain it without using numbers. So you would have 10,000 miles times 45p, and then 1,000 miles times 25p, and that would be the charge that you would put through if you were doing this on a cash basis. And that's the first thing I want to highlight. The next thing I want to highlight is that, well, first of all, we would never allow depreciation. That would be not in anything. Then it says the depreciation charge relates to fixtures, fittings, and equipment bought for 9,000. This is a capital charge. Under the cash basis, we can put through capital expenditure straight away, except cars. We can't put cars. We can put everything else. So we would deduct 9,000 as well from our income when we put it through. I'll let you have a go at this. And then, but what we can do is we can work out capital allowances. You might not have done, you've not done capital allowances per se just yet, but have a go at, when we come on Friday, we will work out the capital allowances on this car and sort of work it out, if you like. And it says that she uses the car for 70% for business. Just see what you remember. Remember that anytime a sole trader uses a car for their personal use, we separate out the car from the main pool. If that's any trigger. I know I haven't talked about it, but if you've done this before, done some tax before, we'll come back to this. But the key point is that you can find the government allowable expense on this car, but it cannot be put through. 9,600 cannot be put through as an expense because it is a car. And then the other big point, I think, well, remember this is all for cash. So what you're looking at is where it says revenue includes this, which is still receivable. You need to deduct this, right? I'm interested in cash. What have they received? 80% of this was for cash, I think. Same thing. You have to find 80% of that. So the key point is that you're looking for cash. Now here's the issue here, where you know it said something about private use or personal use. It says that Rosemary lives with her husband, and 4,900 of those costs relate to her personal use, and that's fine. You can leave the 4,900 in there as an expense. But is that give you this? They'll tell you, oh, the cash basis private use adjustment for 2 occupants is 4,000. They'll always give that to you. So you need to basically, this is an income. We're basically saying, yes, you may deduct this as an expense, but in terms of adjusting it, we're going to add back 1,000, if you like, as a benefit, so to speak, if you like. So she's expense, but think of this as a benefit, if you like, for this cash basis private use adjustment. So in effect, you could either say it's 4,900 minus 4,000, but the key point is it's just an adjustment. Now, I think those are the main points. So have a go at TYU 5, please. You do at it, and I will test you again on it. We will play with it. But the key point again is making sure that we only recognize motor expenses this sort of AMP version, and we ensure we recognize capital expenditures straight away, and we also make sure we only represent or show the cash amounts as well. Yeah, let's see how we go with that. Cool, great stuff. And I will see you on Friday. So your homework technically is TYU4 and TYU5.